Welcome back to my weekly QQQ trade series. I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals, showing you how I make money trading options. Today, QQQ is trading at $517.82 a share. I am short a $504 cash secured put expiring today and a $504 covered call expiring next week. In this trade update, I roll the put out 1 week for income, make a plan for next week's expiration, and assess the current state of the position. The great thing about selling and rolling options this way is that even with a share price decline, the profit on my position has increased in the past 3 weeks. It looks like I have a pretty easy roll to make today. It is January 3rd. This $504 cash secured put is prepared to expire out of the money, and the $504 covered call does not expire until January 10th. So let's just roll the put straight out, and then I'll write some instructions to myself for next week, and we'll do an accounting of the position as it stands right now. It filled at 120, so let's fill out the spreadsheet. So going back, you recall, if you've been watching this trade series, on December 13th, I rolled a covered call with a strike price of $504 out to January 10th. So that one expires in 7 days. And it is my hope that next week I will be able to roll the covered call up and have a covered call strike price that is higher than my cash secured put strike price. So I'm going to make a note that on about what I plan to do on January 10th. I find that writing these kinds of instructions to myself really helps with trade decisions the next week. I always like to have a covered call strike higher than my cash secured put if I can roll both for a net credit. So that's my plan next week. And let's do a quick summation just to see where things are since I opened this position on, let's roll back, May 16th, 2024. So let's do a little math. So as of now, my out-of-pocket expense is $54,312.29. There are 126 shares in the position. So I will take my total expense and divide it by 126 to see my average investment per share, 431.04. So I could accept assignment on this covered call next week and have a profit, but if it's possible to roll it up for net credit and increase the strike price, I will do that. So let's check the profit and loss of the position right now. It is partially realized, partially unrealized. But if I wanted to liquidate this entire position today, I could receive $63,572. So what this shows us is that because I've been using the options premium to reduce my average investment per share, even though the share price has declined from 528.24 to 517.82, my profit is holding pretty steady and has actually increased since the last time I checked it on December 13th and December 20th. So the plan is working, and we will continue doing what we're doing, and I will see you next week for a trade update.